Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 21st of August 2022. And we're looking at last week's gold and silver price performance and assess where we think that price is going to go this coming week and the factors that affect that decision and forecast. What we did notice is gold and silver prices fall last week, and we also asked the question, has it now pivoted downwards for the foreseeable future? Let's take a look. Right, let's get down to it. Looking at precious metals first, gold fell $55 last week, falling from 1802 to 1747, having been as high as 1803 and as low as 1746. So it basically opened at its high and closed at its low, a fall of 3%. And this follows a previous week's rise of 1.5%. In sterling terms, gold finished the week at £1,478. That's down £7. And in euros, it closed at €1,740. That's down €16. Silver performed far worse. It actually fell $1.77, and this is after a previous week's rise of 92 cents. It fell from $20.84 to $19.07, having been as high as $20.88, i.e. 4 cents higher than its previous close, and a low of $19.05, i.e. 2 cents lower than its close this week. A fall of nearly 8.5%. So once again, we've seen gold and silver start the week virtually at its high, continue to fall until the end of the week, and fell virtually, but not quite, to its low. In sterling terms, silver closed at £16.13. That's down £1.04. And in euros, it closed at €19. That's down 1.34 euros. Now, consequently, the gold to silver ratio rose, and quite significantly, by over 5 points, in fact, from 86.5 to 1 to 91.6 to 1. Now, if we look at the prediction we made last week, we said we expect to see gold trade between 1750 and 1850, with 1725 and 1875 as outliers. So with the exception of $4, gold traded within our predicted normal range. It did go down to that 1746. And silver also traded within our normal range because we forecast 1875 to 21, and that's what happened, with 18 and 22 as outliers. Now the difference between gold's high and low for the week was $57. That compares with 37 the week before and 41 the week before that. Silver traded within a band of $1.83, compared with $1.04 the previous week and 96 cents the week before that. So there was far greater movement this past week. Now we'll look a little bit further into this in a moment, but after we've looked at the other financials. Cryptocurrencies broadly were down, and Bitcoin had in fact fallen by 3,431 points. And it currently stands at 21,265. We think Bitcoin still has further to fall, as we believe the whole of the crypto market has, and potentially the equity market too. Talking of equities, they were lower for the week, but not significantly. The Dow Jones closed on Friday at 33,706. That's down 292 points on the day and down 55 on the week. The S&P 500 closed at 4,228. That's down 55 on the day and down 52 on the week. And the Nasdaq Composite closed at 12,705, down 260 on the day and down 342 on the week. So had it not been for Friday, the Dow Jones and the S&P would have actually been marginally, not significantly. Brent crude closed at $96.72, that's down $1.43, and WTI crude closed at $90.77, that's down $1.32 on the week. Heartening news for us all. However, the majority of that fall was the result of the rising dollar, and the dollar index stands at a whopping 108.17. a leap of 2.54 points on the week, and its largest weekly advance for the dollar since March 2020. Now let's take a quick look at the economic data that was announced last week, and also what we are expecting to be announced this coming week. So let's take a look at the economic reports announced last week for the United States. On Monday, we had the Empire State Manufacturing Index coming in at a massive minus 31.3, and that compares with the median forecast of 5. We also had the NAHB Home Builders Index for August coming in at 49 against expectations of 54. Building permits higher than anticipating, housing starts lower, industrial production index higher, 0.6% compared to 0.3 for July, and capacity utilization rate virtually as expected. Retail sales, interesting. These were announced on Wednesday, and we said pay close attention to these. However, they were pretty maligned in as much that they were neither higher nor lower, and they came in at 0%. Markets were expecting them to be slightly higher at 0.1. However, retail sales excluding motor vehicles were higher at 0.4%. On Thursday, the jobless claims came in slightly lower than anticipated at 250,000, but the continuing jobless claims marginally went up from 1.43 million to 1.44 million. The Fed Manufacturing Index was positive at 6.2, and existing home sales as per expectations. Now, this coming week is going to be interesting, though we suspect in advance, apart from Friday, is not going to have huge impact. We have the Chicago Fed National Activity Index for July. We have flash PMIs, manufacturing and services via the S&P US, 51.7 for manufacturing expectations and 50 for services. Durable goods orders, core capital equipment orders and pending home sales are being reported on Wednesday. And then Thursday, again, the regular initial jobless claims and continuing jobless claims. And we also have gross domestic product revision figures. But it's Friday. If there's going to be an impact for the week, Friday is going to be the day. Why? Because we have the PCE price index monthly, the core PCE price index monthly, the equivalent year over year. We also have real disposable incomes, consumer spending, personal incomes, nominal consumer spending, trading goods, as well as the UMich Consumer Sentiment Index for August. All eyes by all traders will be on this. So, as stated, all eyes will be on the PCE figures this coming Friday. Let's go back to gold. Now, whilst gold traded within our normal trading range, we did expect another week of holding up, and then the decline to occur the closer we got to the next FOMC meeting towards the end of September. Now, having said that, though, we did point this out last week. Quote, while investors and traders are focused on inflation over interest rates, we may see a little more strength in precious metals. However, should they pivot again the other way, then there will be headwinds, meaning once the focus of traders then move back to interest rates, then gold and silver prices would take a bit of a hit. And it certainly, at least based on this past week, now seems to be the case that they have refocused. We'll see over this coming week whether that was an anomaly, though we suspect not. Now, the critical levels for gold are essentially $1,750 and $1,800, with $1,700 underneath providing extremely strong support and $1,850 extremely strong resistance. Should $1,700 be breached, then we could see a very reasonable decline in the gold price. However, should we see gold rise above 18, and pip above that 1850 level, then it could potentially test the 1900 level. Unfortunately, with the FOMC decision looming and the dollar strengthening, we don't see 1900 for a while quite yet. Silver markets declined almost from the start, continued their decline, and some analysts are now predicting a decline to $15 over the coming months. We cannot really argue with that view unless something significantly happens to cause the decline of the US dollar. To the upside, $22 is critical for those few remaining bulls out there. With inflation running much higher than the Fed is prepared to put up with. Therefore, higher interest rates being on the cards. With the US dollar continuing to strengthen and economic growth both within the US and globally slowing down, there simply is not much to be too excited about over silver for the short term, unless of course you plan on being a long-term purchaser. Then it's a very exciting time ahead in our view. Though we personally, but it's not advice, would hold off until that $15 level is in plain sight. So what are our forecasts for this coming week? Well, global international affairs aside, because no one ever knows what's quite going to happen there, certainly in terms of the dispute still with Russia and Ukraine, though as far as the news media, that's gone rather silent. But this coming week, we expect to see gold trade broadly within 1700 to 1850, though we suspect it might be a bit tighter than that. And as far as our outlier range is concerned, 1675 on the lowest end and 1875 on the upper end. We also then forecast silver to trade broadly between $18 and $20, with 1750 on the lower end and 21 on the upper end. Though we have to say that if the market does follow through with the scare sort of fear of what is happening to the global economy and the silver markets in general, we could see quite a dip early on in the week, and most certainly by the end of the week when the PCE data is announced. Though we're holding this outlier range of between 1750 and 21. What do you think? Do share your thoughts. We'll keep this as quick as we can, so thank you for listening. Please subscribe to the channel, press that bell sign, and we'll reproduce this video tomorrow under a different thumbnail and headline. Meanwhile, have a safe, enjoyable weekend and prosperous week ahead. Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.